Hello and welcome everyone to this week's COT review. I'm Thomas from COTbase.com. This is going to be our sixth COT report of the year, and we're going to start by looking at the changes in commercials positions as usual. We've got a 23% change in commercials positions, as you can see, 21 in large speculators. And of course, if you look at the chart, you can see that these changes are greater than average. It is a bullish COT change signal, of course, but if you look at the price, you may see that this signal may have came a little bit late. By the time we see this in the report, that of course is showing you a Tuesday's position in traders open interest, then you may see that this may be a signal that's a bit too late for us right now. Opening a 5-year chart, you can see how extreme the market is. We are currently more or less in between the two extremes, the bearish and the bullish. The last one was a bearish, and you can see prices have gone a bit lower, not that dramatically. I wouldn't say that I can tell too much about the COT Extreme right now. I think prices can go either way. I wouldn't go into speculation which one is has a greater chance. So I'll just move on and look at the Chicago wheat, where we have a 20% change in commercials positions. You can see the change over here being a bit larger than average, but as you may see, we do see greater changes quite often. In this case, we have a bearish change signal after prices going a bit higher, so this may be a good one. If you look at the chart, could affect prices in the near term. Opening a 5-year chart, on the other hand, you can see that we have had a pretty significant bullish extreme in the market for quite some time, and we may expect a major change in the trend coming. Of course, it's hard to tell when, but nevertheless, if you look at the chart, there has been a significant decline in the price of wheat, which resulted in bullish COT extremes throughout 2016. And now we're moving a little bit away from those extreme levels, and as you can see, prices are going higher. So I'd say the longer term picture is, in my opinion, would be still a bit upwards until we see a major change in traders' positions. Of course, if we reach an extreme similar to the one I'm just pointing to you, of course we should be a bit cautious then. The next market is going to be lumber, with a 19% change in commercials positions. You can see the change over here. Again, we're talking about a larger than average change size. And here, although we see a decline already happening, we may be on time with this signal. We may consider a trade over here. Of course, don't forget, COT change signals are never that strong as the COT extreme signals, which of course are more helpful on a medium to longer term time frame. So you can see there has been a significant rise in the price of lumber since mid 2015. We had a significant bullish COT extreme signal that helped us catch that bottom, and since then prices have gone higher, and we've seen the COT report change in accordance to that. Right now we are more or less in between the two extremes, so I would say it's still the bullish extreme that could affect prices, and we may see even greater prices coming in the medium to long term. Jumping to the COT extreme for large speculators, you can see we've got the cocoa market on top of the list with a 657 report extreme. So that's a pretty significant extreme. We had this extreme building up. We've been talking about this. You can see there's a huge drop in prices. Of course, when we see such a dynamic move in prices, we should be very cautious with any trades, because although we have this not all-time, but close to all-time COT extreme, these extremes, of course, may widen to even greater levels before we actually see a top or a bottom. In this case, of course, we're talking about a bottom. But nevertheless, it's a great market, and I think it will produce some good opportunities soon. Live cattle is our next market with 112 report extreme in large speculators. Of course, you can see that's the same extreme in commercials. We're talking about a bearish COT extreme. You can see on this 5-year chart that we can get to even greater levels, but if you look at the price of live cattle, you can see that we've already experienced a bit of a drop already. So who knows, maybe this decline that has started a few weeks ago may continue, and we see even lower prices coming in live cattle. And last but not least, we've got the orange juice with the 44 report extreme, which of course is not that big. Nevertheless, we're going to open the chart and see what it shows us. So here you go. You can see this is the time and place when we saw orange juice the last time. Nothing too big. So when we want to analyze the COT extreme, we have to look at the extremes. In between, it's very hard to tell when it's going to turn. So I think what we have to look at is that the last major extreme was actually bearish, and since then you can see there was a drop in prices. So this trend can easily continue. Nothing. Of course, we're getting towards bullish extreme levels, but I think we should be very cautious here. It's not the best signal, I would say. So that is going to be all for this review. I hope you enjoyed it, and I hope to see you next week. Have a great weekend. Take care. Goodbye.